HSA qualified expenses. What are the IRS rules now? Imagine having a special account that helps you pay for healthcare costs without worrying about taxes. That's what a health savings account, or HSA, can do for you. But knowing what expenses qualify is key to making the most of it. The IRS sets clear rules about what you can use your HSA funds for. Generally, qualified medical expenses include costs for diagnosing, treating, or preventing health issues. This covers doctor visits, hospital stays, surgeries, and lab tests. If you need prescription medications, those are usually covered too, along with many over-the-counter drugs if you have a doctor's note. Dental care like cleanings, fillings, braces, and dentures are also eligible. For eye health, expenses such as eye exams, glasses, and contact lenses qualify as well. Medical equipment like crutches, wheelchairs, hearing aids, and oxygen supplies are on the list too. Preventive care, including annual physicals and vaccinations, is also covered. The IRS updates this list regularly, and for 2025, there are about 87 items that qualify. This includes some personal hygiene products like toothpaste, deodorant, hand sanitizer, and sanitizing wipes. Vitamins and nutritional supplements are generally not eligible unless a doctor provides a letter of medical necessity explaining their use for a specific health condition. Sometimes, expenses that normally don't qualify can become eligible if a doctor writes a letter explaining their medical need. For example, weight loss programs, health club memberships, or special diets can qualify if they are prescribed to treat a diagnosed condition. You can also use your HSA to pay for your spouse's and dependents' qualified medical expenses, as long as they meet IRS criteria, like not filing a joint tax return or having income above a certain level. There are some important IRS rules to keep in mind. For 2025, contribution limits are $1,430 for individuals and $8,550 for families. The minimum deductible for high-deductible health plans increased to $1,650 for individuals and $3,300 for families. Using HSA funds for expenses that aren't qualified results in paying income tax plus a 20% penalty unless you qualify for an exception. Also, you cannot use your HSA as security for a loan or buy property with it. For Asian American taxpayers, understanding these rules helps maximize tax savings and healthcare benefits. Keeping receipts and doctor's letters for any expenses you plan to claim is a smart move. Consulting with a tax professional familiar with HSAs can help you stay compliant and make the most of your account. In the end, the IRS rules focus on medical necessity and proper documentation. The list of eligible expenses is growing, and using your HSA wisely can give you 3 big tax benefits: tax-deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical costs.